All right, so welcome to the episode 3. So, Fyzee, let me know, what update do you want to give us in your investment journey? What's happening?
To be honest with you, I don't want to share anything right now because the portfolio is not looking very good. Actually, you know what? It is down overall about 3%, which is actually pretty good considering everything that's happened over 2022. So you know what? That's the update.
Wait, so you're comparing from last year, Jan, till now?
Yeah, like a year, I suppose.
So 12 months, over 12 months,
yeah,
pretty much down to
12, 13 months.
So, because percentages are percentages, and as well, if you want to share or not, it's your decision. What's the figure? What's the number?
A number of the...
Like that 3%, what is it?
You know what? I have my share side. I should have a look, but I think it's in the tens of thousands. Yeah.
Okay.
About 15, 17K.
So typically, Fyzee is not a millionaire.
Yeah, no. 3% on a million. I would be, yeah, but yeah, it's not too bad. 3%. But the start of last year, if we just speak in like dollar terms, I was up 45 and I was feeling great. You know, things were good. And then throughout the year.
So you were up 45%?
45K.
45K.
I wish percent. Which it's not a lot. Look. Yeah. But then
no, I get it. Because then you've been investing for how long now?
It has been start of 2018, January.
2018 is pretty much a couple of years now.
Yeah. So, I mean, when I first started, I was just day trading, making stupid mistakes, which thankfully I've learned from now.
It's part of the journey, I reckon.
Yeah, part of the journey. But I think only recently, say the last 2 to 3 years, I've really started to do long-term investing. So I think if you want to be like legit about it, I think it should be measured from that point onwards. Anything before was just like stupid things.
Hold on. And for those listeners that don't know what long-term investing is, how do you define it for yourself?
Long-term investing for myself is not paying too much attention into the hype in the market.
So pretty much every hour, every day, if the share price goes up or down.
Exactly. It's good to look at what's happening, to be informed of the world events. But if you're looking at the charts every 5 seconds, if you're comparing, looking at news, if you're looking at all that sort of stuff, it's just going to ruin the experience, and you're going to be panicking, or you're going to be ecstatic. You're going to have one high of emotion to another, and it's just not the way to go. So long-term investing for me is investing passively every single week, fortnight or month into a set portfolio, and just doing it regardless of what's happening over the long term. And then you'll find the growth will hopefully come. We can't give any guarantees, but that's how I would define long-term investing, and that's what I do.
But that's a good definition.
Yeah.
And then pretty much it's your share, so you don't have any property, not in that path yet.
No, not yet. I've decided that is not for me just yet. But look, I'm looking into it. Just got to save up for a deposit.
Hey, yeah, I was going to say, that's the first problem, saving the deposit, because then prices here are just crazy.
Yeah, absolutely.
And then now renting is just getting so bad.
Yeah. Dude, every single post I see on TikTok is just like people talking about rental crisis and like all this other stuff. It's pretty crazy. Like the vacancy rate nationally is like what? Less than 2%, like 1.3 or something?
It's like 0 point something or whatever.
0 point something.
Yes, like it's bad. So that means that if you go and apply for a place that you want to rent, there's probably another 10 people that want it in the same place. Yeah. If you're lucky, if not, there's a couple of hundred that's applying online.
Yeah. Like I've seen videos where there's like 50 people turning up at an open home, it's just crazy. So if you're a landlord, man, you're killing it, or you're probably happy with the demand. What would you say?
No, I reckon you'll be happy.
Yeah.
Because then, I don't know, it's a vicious cycle, because I reckon interest rates going up. That means that the landlords have to pay more in interest. And look, not everyone is an expert when it comes to investing and their own journey and that sort of stuff. People make mistakes.
Yeah.
And then I reckon a common mistake is going to be, I'm paying the bank more, I'm going to charge more for the rent.
Yeah.
And you don't think about the value, because like you're trying to help someone rent, and then the value there is that you want them there long term.
Yeah. But then I think at the same time, the landlord's like, well, I should be charging.
The other thing that I'm wondering is, I don't know, maybe it's the real estate agents. Maybe if we have any real estate agent in the community that can help out and tell the truth of how it goes, maybe they're the one to tell the landlord, oh, look, we can get an extra $1,500 a week, let's do it.
Yeah.
Like, I can't tell. I don't know if it's the landlords that are actually taking advantage, or if it's the real estate agents just influencing the landlords to do this.
I think I've heard a lot of stories where the landlord just wants to keep the rent as it is, while the real estate agent is the one that actually proposes to the landlord, hey, other properties are going for an extra $100 more, let's increase it or whatever. I mean, I've seen some ridiculous posts where rent has increased or the real estate agent is proposing the rent increase of like $300 a fortnight extra or something ridiculous. And it's just like, crazy. I mean, I can't comment on it because I'm not a property investor, but yeah.
No, but it's a lot. It's a lot.
Yeah.
I'm just trying to remember because then I was reading this the other day because pretty much the last couple of weeks has been just all of the news like rental crisis, issues, inflation, all that going on. And then officially, if you're paying more than 30% of your wages in rent, that is financial stress.
Really?
So yeah, so pretty much you'll be doing it tough according to figures. This is stuff from like ABS, the Australian Bureau of Statistics. It's not that just a random person just making this up. It's like actual government looking into it and just saying, look, if you're paying more than 30% in wages in rent, that's too much.
So that's after tax, I'm assuming?
Yeah.
Yeah. Right.
Yeah. So it is painful.
Yeah. No, look, it will be. Look, I think even homeowners that just own their property and they have a mortgage on it, even they're having it tough as well. Like I'm speaking to a lot of people, the interest cost has just increased so much. And I think everybody generally is having it tough, like renters as well as property owners. I think if you're an investor, people listening might not like that too much.
Yeah,
everybody just
depends on where you invest in. But I reckon if you have a property, then not that way, it's going to be a bit hard.
Yeah.
If you're in shares, it's like, okay, interest rates going up, it doesn't affect me.
Yeah.
Unless you've got a margin loan.
Yes, which we should probably talk about. So the topic of the podcast is our goals for 2022 and how that sort of turned out and our plans for this year. So you've got some debt, more debt than I do. So let's talk about your, first of all, we'll start off with 2022. How do you go with your investing, like stock market wise? How did that go portfolio wise?
So I'm looking at my figures on share side, right? So pretty much my portfolio went down. I got to say, I bought an apartment, right?
Yep.
And this was in 2021, September. So right now I'm having fun dealing with all the interest increases.
Yeah.
And then I just have to suck it up. That's it. Pretty much whatever. I used to spend a couple of $100 a month buying coffee, literally $5 Monday to Friday. That's usually do.
Yeah.
And then I've had to cut that out pretty much because then that's going into the interest rates that have increased. So it's fun. Now I'm drinking just instant coffee at home.
Yeah.
So having fun there. And then pretty much, with that, because I added that into my share side portal. Oh yeah, if you don't know what share site is, pretty much we use it to track all our investments. That's all it is.
Yeah.
Just a shout out, but they don't pay us or anything.
Actually, a link in bio. I'll go check it out for a discount. But yeah,
at least we can help you if you want to use it.
Yeah.
But I reckon you can, because I used to take advantage of share site when it was free because I used to track things in there.
Yeah, they had 10 free listings, right? That you could do 10 free stocks.
Pretty much. Because then I used to have fun because then when I had probably 20 different shares for different companies, whatever, I used to just add the 10, export the Excel, do all the 10 and then just use that.
That's hilarious.
It's a cheap way to do it. Yeah. But then once you actually start making a bit of dividends, that's what happened to me. Pretty much a bit of extra cash. Then I started using full in and just pay for the version. But it's awesome to track everything. And then I was going to say pretty much for last year, accounting for the property that I bought because I'm tracking it here. Even if I live there, I shouldn't be tracking it because officially it's not really an investment. It's just sitting there. It's just like you're paying rent to the bank.
Yeah.
But counting that, my portfolio went down 127K.
127K?
Yes.
Or just on the property side?
And I got to say, I just saw it now because I'm like, are you kidding? I didn't know I had that much.
Mate.
It's a lot.
So just the property value itself went down that
No,
much,
so that'll be the property plus the shares.
Okay.
Yeah. So
what's the split like?
A lot. Right now, that's actually a good question. What the split right now will be? I'm just trying to load it.
Yeah.
See what it is.
But damn, I mean, just hearing those numbers, man, 6-figure, that's rough. That's very rough.
It is rough, and I know. That's why I don't look at the whole numbers. I look at the percentages because it hurts less.
Yes. That's the thing that I've been doing as well. Percentages are much more nicer, smaller.
Because as well, I was going to say, keep in mind, I've been investing since 2015. So now 2023, that's a good years of investing.
Mm.
Yeah.
And obviously you would have learned heaps in those years.
Yeah, I'm not complaining at all.
Yeah.
Yeah.
But looking at sort of like once your 2022 numbers like are loading, in terms of 2023, what are the goals for this year?
So goals for this year, pretty much, I want to refinance the property. So bad luck that I had back in 2021, I couldn't get a bank to lend me money. Like I had the 10% deposit. So pretty much I couldn't save a 20% deposit. Anyone that saves a 20% deposit and gets a property, I'm like, kudos to you.
Yeah.
You've
Good job,
done
man.
a good job. Yeah, because I couldn't do it. Like pretty much, yeah. Saving for a whole decade, because I was able to just do like a 10% deposit. That's it. And then, so that means 50K. That's what I saved, 10% deposit. And then that's when I'm like, okay, cool. I'm going to buy an apartment. Like I'm done renting. It's just too much. Dealing with the agents and then all the drama, landlords and stuff. I'm like, no, can't do this anymore. So then bought the apartment and pretty much because I couldn't get what they call a Fyzee lender, which is the banks, I went to a non-bank lender. So that means that they charge high interest rates. So right now, I think I'm sitting on like 7.24%. That hurts.
Yeah.
That hurts a lot.
Damn.
Yeah.
Have you perhaps asked them for a pricing review? It's very hard to because they're non-bank, but...
Yeah, it's annoying. I've tried. Because then a lot of people are telling me that, but then it seems the banks are friendly to you is when you want to do that, but then non-bank lenders are like, nah, we can't do it. Have a nice day. Move somewhere else.
Yeah.
Oh, what do they call it? Because I was reading this the other day. This is pretty much the mortgage prison. What's happening to everyone that can refinance.
Yeah, it's just another media term that you just pulled out. God, I hate
Pretty
these
much.
terms.
Yeah.
But yeah. Because I think with these second-tier lenders, what I generally have heard from experience is that people don't stay with them for long-term anyways. So they don't really want to like reduce your rates for the long term because they know you're going to leave anyways. Like in general, if someone is with like Pepper Money or like Liberty or something or Latrobe, generally like you don't want to stay with them, right? Generally people don't want to stay with them. So I think rate wise, that's why they don't really reduce it too much because they know that eventually you're going to leave whether they reduce the rate or not. Because generally rates are going to be higher with them anyways because they don't take deposits. Actually, don't quote me on that. I know some of them don't because they're not really banks. But yeah, I think it's not in their best incentive to like lower rates because that's their entire sort of business model. Just get the customers that are, you know, very riskier like you.
Thank you.
Yeah, you're risky, man. Yeah, no, kidding. So in terms of your refinance, you're basically stuck for the time being because obviously...
Pretty much. I've tried to do it last year and then couldn't do it because then last year, literally when the interest rates started going up, that's why I'm like, okay, I went to a broker. I'm like, hey, can you help out? Whatever. And then they took a month. And then with my luck, that month, that was the first increase that happened. And then they're like, oh, look, we're still working on it. And then 3 months go by, another 3 increases pretty much. And then they're like, oh, look, we can't do it. We tried, they don't want to do it. So I tried another broker. So second try. And then same thing. It took him 3 months just to get like answers from the banks and this and that. What like literally just building my case. And they're like, no, can't do it. Yeah.
Disappointing.
And then look, I understand because the way they see it is I'm on a 90% LVR, so loan to value ratio. So pretty much because I gave a 10% deposit. And then for them, it's too risky.
Yeah.
So for the time being, until the property goes up in value, I'm pretty much stuck.
Yeah. And I think you'd pay LMI again as well.
Yeah, so that's another thing because then the brokers were telling me, look, there's no point because then you're gonna waste a lot of money on LMI. I reckon just wait.
Yeah.
And then because I was already stuck, I already knew it, and pretty much So currently just waiting.
Yeah. I think once you do get the opportunity, if the income is there and obviously the equity is somewhat there, I think you'll pay LMI regardless because that 20% equity to build up is very difficult, like especially in your position. Probably just aim for like cashback offers and the rate's going to be like lower anyways because cashback can like take up some of the brunt of that.
Yeah.
Which would help a lot. Like if you can get like a 4K cashback with a certain bank and then another 2K cashback as well for the other property.
I was reading this because then this morning, apparently there's a couple of non-bank lenders doing like 10K cash.
Really?
Yeah. Cash
Non-bank is doing as well?
Yes. And I'm like, whoa, that's a lot. Yeah.
There's got to be a catch. 10 grand.
Oh, there's always a catch. Yeah. And then the latest problem that I had pretty much is because then interest rates just keep going up. Right now, because the last time I tried with a new mortgage broker to help out this literally now in Feb. And then they're like, look, sorry, we tried, we can't help you. The main problem is that you can't pass the buffer tests.
Yeah.
That's another thing. So pretty much the banks test you on the interest rate that they want to offer you, plus what is it, like another 3% on top.
Yes.
3%. So pretty much they're testing you on like 8-9% interest rates.
Yeah, which is ridiculous. We've got this thing that we're doing now at our bank where a customer is on a fixed rate of like something ridiculous, like a 1.89, which is good on them for taking that rate. But we're testing that customer as if they were on variable. and then we're adding a buffer on top. So their variable rate will be like, say, 5.5, for example, and then we'll add another 3%. So we're testing them on 8.5%. Currently, they're paying like 1.89.
Yeah, so
we're
they're
testing
paying
them on like
nothing.
4 times that, which is ridiculous. Which we shouldn't be doing. It's a crap policy. But like,
No, but I'm
we're
guessing
being
it's,
really conservative.
it's just the red tape, whatever
Yeah.
the steps that you gotta follow, all the bureaucratic stuff that they have there.
Yeah.
It sucks, especially for people like me. But then it's like you can't do anything. It's just wait. Yeah.
Yeah. But you know, it's what it is. I mean, they've got to be conservative. It's what the RBA is sort of forcing upon the economy. So it's got to happen. But in terms of like myself and my goals this year. So 2022 went okay. I used mostly my own money to invest. 2023 is the time for me to start using debt to invest, which, you know, I'm not that comfortable with. So I've started to use my loan that I've got, investment loan. It's got a limit of 100K, and I made the faithful decision of drawing down 10K.
I'm going to give you the finger quotes investment loan.
Yeah, investment loan. So I've drawn 10K on the loan. The repayments are about $30 a month, which is like very affordable. And I think it's very good to start off with like little amounts of debt and sort of see how I feel.
And then for these, it's not like you're going crazy and doing day trading. You're literally investing into like index ETFs funds.
Correct. Yes. This is not like a margin loan. I wouldn't probably do that at this stage because I think those loans charge a lot. It's like, I think high 7s or 8s, which is insane. But yeah, this is a way to sort of invest for the long term while also using debt. Obviously, not financial advice, but like this is a conclusion that I've come to.
It's not for everyone, to be honest.
Yeah.
And like if you got too much debt, you can't sleep at night.
Exactly.
To be honest, like all the stress trying to see it there,
Yeah,
it's just too much.
yeah, it's too much, and you don't want to be in that position. So I think if you have the opportunity and you think you're mature enough for it and you're educated enough, you can probably start to take out like little amounts of debt to invest responsibly.
I probably would say don't do it.
Yeah, just don't even do it.
Just don't even do it. Don't even
scrap
bother.
that.
It's too much. Yeah.
It's too much headache. Yeah, don't do it. But I think for myself, that's what I want to do. So I've been trying to sort of take it out in little amounts and see how I go. And so far, it's going very well. And the way that it worked out quite well. So in terms of the overall profit and loss position, like because the certain ETFs went up, I'm actually in the green already. But obviously
nice.
Things could go south. I'm not too concerned, but it's long
And then
term.
right now, because you're using that investment loan, pretty much you're paying that out of your pocket, or do you like get enough dividends to pay for that?
So with how it works,
Yeah, actually, how does that work?
so it's got about a 70% LVR. So with that, I think the
So you get
dividends.
So pretty much, if there was $100, 70% LBI is like $70.
Correct. Yes. So about
So
70
pretty
bucks.
much the bank or whatever is giving you $70 that you're borrowing.
Yeah, correct. Yeah. And 30% is my share. So with the dividends of the whole 100%, it covers about, say, 30 to 40% of the overall commitment. And then the other 60% comes from my other dividends from ETFs that I already own. So this thing basically pays for itself in a way. It doesn't pay for itself solely, but it pays for itself considering the entire portfolio, if that makes sense. So considering all the dividends that I get. So I think it's a sort of safe way of getting into it. But
so random question for your dividends. So in 1 year, like how much do you get in dividends?
I think it would be probably about 4 to 5K a year. I think probably 4. Yeah.
Oh, that's nice. Yeah.
But they all come around sort of July or, something like that.
Yeah,
like
that's roughly it's pretty much like $300 that you get every month.
Yeah. Which is pretty insane because
So that's paying for your coffees and your lunches.
yeah, it's paying for all my subscriptions. Which is pretty nice, man. The other thing is because I don't
So
get
I reckon there's a benefit of long-term investing because then you've been doing this for a couple of years now, and then you see the benefit that you get dividends and they're paying bills.
yeah, it's pretty insane. The only issue is because I get it as a lump sum payment, because that's when the ETF issuers pay the dividends. It kind of sucks because you don't feel it. You don't feel like it's doing anything for you until it sort of hits at that one time, and then the rest of the year it's just like nothing. So that kind of sucks. But when you do get the payment in like July or whatever, it feels absolutely amazing. Like it's very good. You really feel like your investments are working for you, and I think that's the best part. But of course, it takes a while.
That's a bit. It's like investing. I reckon it's a lot of psychology in it Because then you invest something, you don't see a return, but then suddenly you see it after a couple of years.
Yeah.
It's just waiting for that just hurts.
Yeah.
Especially if you're impatient, it's just the waiting game. It's too much.
100%. Like if you're just starting out in the stock market and you invest like $1,000, the dividend on that is going to be like $20, $30. And you're going to be like, what the hell? I'm putting $1,000 and I only got like $20 out of it. Like this is such a waste of time. But then you've got to look at the long term and think about how much you'll be investing over the coming months and years, and then work off that. So if when you look at the sort of long-term projection, it gets very exciting, like very quickly. But the thing is, you've got to be able to, wait for that and actually understand that it will come one day, just not straight away. But yeah, that's me for 2023. I want to get comfortable with debt, hopefully buy a property maybe this year. I need to save up for a deposit and sort out the loan situation because being a bank employee, you can actually borrow up to 90% with no LMI, which is...
You.
Yeah, hey mate, come work for a bank and you'll get it. But not with all banks though. With all big fours, I think you can get it. But it is a very, very good deal. But I think the other thing is you've got to come up with the other 10%, which, is not a big ask, especially if you're buying interstate, but you just got to save it up.
So how much of a deposit are you looking to save?
So this is the thing, right? So I'm thinking of at least doing 10%. But the other thing is if there's an option for guarantor, I would like to explore that. But I'm not too sure.
What do you
yet.
mean by guarantor?
So guarantor as in if you've got a parent or caregiver, someone in your family that already has a property, you can actually use their equity to sort of buy your property in a way so they can sort of
I'm
lower the
guessing
LVR.
you're going to ask your parents if they can help you.
Yes, if that is an option. But I've got to explore it because the house already has a mortgage. So if it already has a mortgage, I think you've got to go with the same lender. So there's a bit of tricky things there. So we've got to have a look at if the bank can actually do that transaction, if it's with a different lender. So got to explore that.
No, I'm going to say, talking about different journeys, because then you pretty much your parents, you're going to check if they can help you out, which is good because then they're your parents.
Yeah.
Let's hope you're the favorite son and then they actually like you and then they're going to help you. Yeah, if not, you've been naughty and then they're going to say no.
Yeah, which, you know what, is fine as well. I'll find my own way. But I think the other option I look at is an unfair advantage. But I think if you do have an advantage, you've got to be able to see if you can use the advantage. The other thing is the equity in the house is completely unused because the borrowing power is like maxed out from my parents. So if the equity is not used, I think that is a bigger risk, not a risk, but it's a huge opportunity cost if you've got a opportunity there and you're just like not using it. So I think that's something to consider as well, like financially. Okay. So yeah, a lot of options to sort of go down. I've just got to think about it and just do the numbers because what I'm proposing might not even be a good solution. Might just be crap.
Yeah.
So
it's just looking into it. It's a different journey for everyone. That's the thing.
Yeah.
That's funny because then as the years go and then as you can see things, you are open to more opportunities. Like this, the fact that you're going to talk to your parents and they see if they're going to help you out or not. And the other is that you've been investing pretty much in shares because then it's like there's no point going to property. It's too much because you don't know happy to borrow money.
Yeah, that's the other thing.
Because then for me recently, last year, because then mum and dad, they never bought a property. Like unfortunately, like they're already retired. They never were able to buy a property. And I'm guessing a lot of people like living in Sydney, Australia and then all over Australia, like they're in that bracket that you couldn't just buy anything because you couldn't save a deposit. Like it's too much stress. And then because I got lucky, I saved the deposit. And then for the apartment that I'm in, then last year I'm like, mum and dad, do you guys wanna? Because I had the cash literally. I'm like, okay, I'm thinking of buying an investment property, but just a quick question: do you guys want me to buy an apartment and you guys move there? And then technically, and then officially I'm your landlord and you pay me rent. So it was funny because then that dynamic of pretty much, because then I'm doing it to help them because it's long term, like whatever, flat rent, no issues. They're not going to get like massive increases, like saying, oh look, you're going to pay me an extra $100 just because I want to.
Yeah.
Like that's not going to happen. But then that dynamic, so that was good because then it's helping my parents and then in return they're helping me as well.
Yeah, that's right.
Yeah. So getting comfortable, but that's the other thing, getting comfortable with that. I gotta say it's hard.
Well, it is. I mean, tell me this. How do you feel charging rent to your parents and exploiting them?
It feels weird. It feels very strange. It feels very bad at the same time.
Yeah. So how can you live with yourself?
Look, honestly, the way I see it is, because then I talked to my dad about this, and then he's like, look, officially, the property is under your name. The debt, the loan, it's under your name. So I understand that side because you're stressed because of that. And then it's not like we can help you pay everything, but we'll help you as much as we can. And then from there, if it's too much stress, like worst comes to worst, you can have to sell it. We have to find another place and rent. But at least whatever, if we can do this for a couple of years and then we get to enjoy the place and it's ours, that we can actually paint it, do changes, it's actually ours.
Yeah,
they're pretty much happy to do that. Because as you know, if you like some landlords, then you can't even put a freaking nail just to put a painting or anything.
Yeah, can't do anything.
Like it's
no pets, nothing. Yeah.
You're a prisoner pretty much. You can't have anything. Yeah. So for that level of safety, they're happy in that perspective. And then the way we see it is that, yeah, sure, it's under my name. Yeah, sure, you're renting, but it's like we're paying the bank. Yeah. The bank officially owns the place, not us.
True that. Yeah. So you're looking at it. So obviously you're charging them rent, but like you're looking at it you're looking at it as more of a family thing, and it's helping you all as a family because they get to live in the house, they get security, they can do whatever they want with the house, while you sort of grow your investment portfolio and pay off the bank. Would that be right?
Pretty much that's what it is. Yeah. But then, like I said, like it's been hard. It's not like in 1 year I saved the money and they had the deposits. Like no, it's like I've been saving freaking 12 to 15 years. Yeah. So like it takes time. It's not something that you can do like easily at all. Like the journey is just, it takes a while.
Yeah. Now you're making me feel bad of what I'm thinking of doing. But to be fair though, we did rent for almost 15 years when we came to Australia. So, and the fact that we have a house is extremely lucky. Like we would not be able to afford this at all. It's
and
just
then
too
this
expensive.
was recent. It's not like you've had the house full a whole decade. Like
it's been like a year or just over a year. Yeah. So like just getting used to like, holy crap, we have a house now in Australia and like some place we can call home. Like this wall, we can like, put a painting on it. Like
the funny thing is that you feel like you made it. It's like, oh, we have a house. But then do you have more problems? Because then now, okay, we have a house. That's nice, but we got to pay the bank. It's not really a house.
Yeah. Plus a lot of ghost costs or maintenance costs, like that people just ignore. Obviously, like maintaining the garden, the house, water bills. I guess water bills you pay anyway, but just so many other things that you got to take care of, which as a renter, you probably don't maybe think about. So a lot, yeah.
A lot happens in there. Yeah.
Yeah. But then the thing is, it's your home now. So you feel very proud to sort of do all that. So, home ownership, man, is a big thing emotionally. Yeah. After renting for so long.
I'm just remembering because then this was on the AFR a couple of days ago. So they did a bit of a stats asking questions, just pretty much our generation.
Yeah.
People pretty much Gen Z, millennials, like so us that we're having issues into getting into the property ladder, to be honest. And then the stats were something along the lines of 70% of young people don't think they will ever own a house or a property.
Damn.
That is like, it's 70. Sad, but then it's a reality of how difficult it is to save a deposit.
Yeah. The initial hurdle is the deposit, and you just get priced out very quickly. There are a lot of schemes though that allow you to enter with a 2% deposit. I think there's a government scheme where they co-own the house with you, where you only need to contribute 2%. Which on Sydney property, how much is 2% on 2 million? It's like 40K. Would that be right? Yeah. Which 40K is doable, I think, in Sydney, but then. You've got
it's still hard, but doable.
Yeah,
like when
doable.
When you say doable, it's like you can just save it in a couple of months. It's like you're talking about a couple of years. Yeah, a lot of hard work.
Yeah, but that's what I mean by doable. Like it's a goal you can work towards. It's not like we're talking like hundreds of thousands. Like if it was 20% deposit, see you later. That's not going to happen. 400K, you're not going to save that. But 40K, a lot more doable. It's a goal you can work towards, obviously not in a year or a couple of months, but a couple of years, which I think is interesting because, and this is like a big topic, but like these types of policies keep the property market, still afloat. You know what I mean? So it still doesn't sort of fix the problem.
Yeah, so it's like they do it to gain people like voters and then to help people as well. But then it's a hit or miss.
Yeah.
Like they're trying to help, but then like I don't know if it's enough, to be honest.
Well,
we probably need to guess that it's an expert on this.
Yeah, I mean the underlying issue still remains, but that's a big topic. I think that's probably it from my end for the podcast. Like obviously we discussed the goals 2022.
No,
Point of
just
three.
one last question, just to make it clear to every listener out here. Your parents, what suburb did they purchase the property?
What suburb?
Yeah.
So suburb.
If you want to share it,
I'm probably not going to share it, but we built the property. So we bought the land like a long time ago. We sort of secured the land, built it in like late 2020.
and this is Western Sydney, yeah.
Yes, Western Sydney, correct.
So you're happy to share that, which is good.
Yeah,
It's
yeah,
good,
Western Sydney, yeah, of course, yeah.
So
We wouldn't be able to afford any other area.
I was going
apart
to
from
say
Western
because
Sydney.
like the another sacrifice there was the fact that you had to buy in Western Sydney.
Oh.
Like it's not a bad area. Like hey, I live here. To be honest, hey, I live in
Yeah.
Parramatta. Like I bought in Parramatta. So just to be clear, so I am Western Sydney.
Yep.
I like this area. I love it. I've been here for a whole decade. So
Yeah, just don't cancel him just yet. Yeah, but,
No, but
saying that,
the point of that
location
saying is
sacrifice.
that location wise, because
Yeah.
then a lot of people might be I don't know a bit snobbish saying, oh, I don't want to live in Western Sydney, but then it's like it's the same thing everywhere.
Yeah.
Like I don't know what you want. Do you want
Exactly.
hipsters around, or what is it? What is it that you
like
want?
Relax. The thing is, because since we came to Australia, we've lived in a similar suburb our entire life when we came here. So it's kind of like you feel a bit at home. It's similar sort of shops everywhere.
So officially, when you guys first arrived, it's been all over Western Sydney that you've lived here.
It's been in a similar sort of suburb in Western Sydney. Yeah. Similar locality.
Yeah, so you know the area pretty
yeah.
much comfortable. You know your neighbors, there's people that
Yeah.
So all of that.
So you know how people normally say, "Oh, it's so far from the city. It's like an hour," but it's like, listen, this is like literally I've done this for my entire life. Like I'm okay with it. Train isn't even that bad. Yes, there's some delays, but you can sleep, you can read, you can do whatever. So it's not too bad. I mean, how often do you go to the city these days, anyways? You know what I mean? Like,
Yeah, especially working from home and all
Yeah.
that. Yeah, no,
So
which is true.
yeah, it's not as bad as people sort of make it out to be. I'm perfectly fine with it. I wouldn't mind it being closer, but if you've got a decent house, which is a bit far away, I think that's probably worth it more. Yeah.
Yeah, but it is. And then I reckon the hard part as well, like if you're looking for space and you want a huge house, whatever you want a pool, you can't find that anywhere, like close to the city. Like it's hard.
Exactly, 100%. You're paying too much for the square meter. Anything else you want to add or go through before we wrap up?
No, I reckon that's it. Any other thoughts? Anything else?
No, I think
What's
that's
on
it.
your mind?
My mind is it's going to be a good year. I'm looking forward to more podcast episodes and looking forward to it. Yourself?
I reckon, same. Podcast episodes, get guests here to help out, and then see how we go.
Yeah.
Yeah, hopefully we go from 20 followers weekly to 50, 100.
Yeah. And then beyond. All right. We're going to wrap up now. Thanks for listening. Follow us on Patreon and Apple Podcasts. And anything else you want to add on that?
I got to say, so our ending remarks, pretty much, if you guys want to reach out, tap us. Like our emails are in there. Follow us, Patreon, pretty much Facebook, everything. We have all the socials. So just reach out if you want to say hi, or at least if you want to be part of this journey and this community.
Yeah, absolutely. Thanks for listening.